Wall Street just got slapped with an inflation curveball, and the cracks are showing exactly where you'd expect. If you own tech or AI stocks, you need to hear this before tomorrow's open. Let's break down the scoreboard. The Dow barely squeaked out a green day, up a tiny 0.1% to nearly 49,761. But the S&P 500 slipped 16 basis points. And the Nasdaq, that took the real hit, down 0.7%, dragged lower by the very AI and chip darlings that have been carrying this market on their backs. Names like SanDisk, Micron, Intel. They all sold off hard before clawing back some losses into the close. But here's the kicker. The 10-year Treasury yield spiked over 1% in a single session to 4.46. That is a massive move for bonds, and it tells you exactly what spooked traders today. Inflation came in hot. The PPI print landed hotter than expected, and when inflation surprises to the upside, growth stocks get punished first. Why? Because higher inflation means the Fed stays tighter for longer. Higher rates crush the present value of future earnings, and no sector lives on future earnings promises more than tech and AI. Now layer in the geopolitics, because this is where it gets really intense. Iran just warned it could enrich uranium to weapons grade if attacked. That is not a minor headline. The Iran conflict is already reshaping global energy flows. China's imports of U.S. ethane just hit an all-time record because the Iran war has cut off rival feedstock supply. Think about that. War is literally redrawing the global energy map in real time. And speaking of China, lawmakers in Michigan just dropped a bipartisan bill to ban Chinese connected vehicles and EV technology from the U.S. market. This comes right as Trump is heading to Beijing. The timing is not a coincidence. Trade tensions are simmering again, and the auto sector is ground zero. So what's the bottom line? The market sentiment gauge still reads 66.6 out of 100. That's greed territory. Investors are still leaning bullish even as inflation bites, geopolitical risks escalate, and the Nasdaq flashes warning signs. That disconnect between sentiment and reality, that's where danger lives. Tomorrow we get retail sales data. If the consumer is still spending despite rising prices, the Fed has zero reason to cut. And that means this yield spike could just be getting started. Stay sharp out there. If this kind of daily breakdown helps you make smarter moves with your money, smash that subscribe button so you never miss one.